we do want to address Biocon results. Biocon reported a strong set of earnings in the second quarter. The company's net profit stood at 355 crore rupees. That's a five-fold jump from the same quarter a year ago. Now, Bloomberg Quint's Nishant Sharma caught up with the chairman and the managing director of the company, Kiran Mazumdar-Shaw, to talk about some of the key highlights of that quarter gone by.
So this was a very important quarter for us because we actually recognized the profit share income that we got from Mylan towards biosimilar pegfilgrastim, which, as you know, was launched last quarter by Mylan in the US market. And what you're seeing in terms of sequential delta is really a large contribution of this profit share, which actually went to the bottom line. So this is an indication of how high margin and rich the biologics business can be when it enters into the US and European markets. We are very encouraged by the performance this quarter, and we believe that we can sustain this business as we move into the future. Because I think it's not just about pegfilgrastim, but we also have the opportunity to play in the biosimilar trastuzumab market. Now it appears that we can actually be ready to prepare ourselves to commercialize in Europe, because we have got positive opinion from CHMP for both pegfilgrastim and trastuzumab, and we expect approval for both these products by the end of the year, which means that at least, if not by the end of this fiscal, at least from next fiscal, we will be able to capture revenues and profits from these molecules in Europe. And then, of course, we have an opportunity to get into the US market, hopefully with not only just pegfilgrastim and trastuzumab, but after the 30-month hold that will stop in 2020 March, we expect to enter the US market with glargine.
Also, what led to this strong growth in the small molecule segment as well?
So small molecules actually saw good traction in terms of both its API business, and of course we've entered the ANDA generics business with our statins, rosuvastatin and simvastatin, and I think that had a good entry because we had a good market share of between 15 to 20% in terms of both these molecules, and we have a pipeline of others to actually follow suit. But I think what has happened in the API business is that there are shortages created by the China impact. In China, which was really competing with us very fiercely, there has been a huge environmental impact which has seen a large number of companies having to shut shop for some time. And that gives us a window of opportunity to play in this market and make sure that there's no further commoditization. In fact, we've seen a slight improvement in our pricing because of course, a depreciating rupee, but at least we feel that the prices have bottomed out. And going forward, I don't think China will be in a position to further commoditize some of these APIs, especially the immunosuppressants and statins, in which we have a dominant, play.
Right. And also, if you can give us more details about the one-time exception gain.
Yeah. So let me put this in context. We have a novel asset by way of an anti-CD6 antibody, itolizumab, which, if you recall, we actually developed for the Indian market and have introduced it as alzumab for psoriasis. But then we realized that India was not going to be a market where we could create value from this asset. There is no recognition or acceptance for novel molecules in India. So we decided to license it to a biotech company in the US called Equilium, who are actually developing it for certain indications, graft versus host and asthma, which actually will add tremendous value if it is successful. Now, the way we did this deal was to take a stake in Equilium, as well as to receive milestones and royalties upon commercial success. The company had to raise capital from the market. It just had a successful IPO last week,
right,
in which it raised $65 million from listing on NASDAQ. And in preparation for this IPO, they underwent an valuation exercise, And once they went into a fair valuation exercise, we had to recognize that fair value because we had a stake in Equilium, which had to be recognized, and it's a non-cash one-time recognition of that fair value, which actually is that exceptional income.